Hey there, I just wanted to share my weekly market update for the week of May 25th through May 29th. So hopefully you had a great Memorial Day weekend this past weekend and having a good start to your week. For big picture, weekly market headlines for national headlines this week, rates did hit their highest point for 2026 for the 30-year at 6.75% last week. So, rates are up 0.75% since the Iran conflict begun just 1 month ago. So we are seeing the rates elevated due to that conflict going on in the Middle East. The Fed is signaling a potential future rate hike, not a cut. So no relief is kind of expected to be anytime soon. Pending home sales and buyer demand are still tracking ahead of last year. And also foreclosures are rising, but still 25% below normal pre-pandemic levels. So the market isn't crashing. Obviously interest rates are peaking up a little bit, but it's kind of stabilized overall. Inventory and housing supply, national single family inventory, approximately 777,000 active listings. So inventory growth year over year is only 1.38%. We are nearly flat with last year. Last year inventory grew 33% over the prior year. That kind of advantage is kind of gone. New listings are still below normal. We want to see kind of 80 to 100,000 per week during peak season, and we're only having hit that twice this year. Sellers are not in distress and they're not motivated to drop prices quickly, so supply is kind of constrained right now. Builders are pulling back on single family starts and kind of leaning a little bit more towards multifamily. Single family starts down 9% from March. And then buyer demand and pending sales. So mortgage applications are up 8% compared to the same week a year ago. So we are seeing a little bit more people applying for mortgages. 9 of the last 16 weeks showed up double digits year over year growth in applications. Weekly pending sales have been running ahead of last year's pace for 2026. And also first-time home buyers are at the highest share of mortgage purchases since 2022. So it's good to see that first-time home buyers are entering the market again. Peak pending season has likely passed. Expected buyer activity is kind of growing gradually slower throughout the summer months while people are going on vacation and schools ending and all that market-related activity. Rate hikes this week will likely push next week's application numbers lower. We need to kind of watch and see exactly what's going on with that, and I'll keep you posted on next week's update. Pricing and seller competition. So home prices posted their strongest month gain in 2 years in April, so up 0.33%, so 3.9% annualized. And then Northeast market are leading appreciation due to low inventory. So that's where we're seeing a lot of appreciation going on, is because the inventory is a little bit lower in that Northeast markets. Price cuts, 36.5% of listings cut their price last week, right in line with the long run average of 1/3. Sellers are kind of being patient and not slashing the prices. Prices conversations require kind of market analysis and kind of knowing street by street, block by block of your specific neighborhood. Expert pricing pressure to return as higher rates reduce buyer demand heading into the summer months. And then inflation, jobs, and the economy. So 4 Fed members voted against holding at the last meeting. 3 wanted to hike, largest dissent since 1992. And then Kevin Warsh takes over as Fed chair in mid-June. He is historically hawkish, so you can expect rates to stay higher. Betting markets, 98% chance no change in June. September is now showing a 13 to 15 chance of a hike. What is driving inflation? The Iran conflict obviously is pushing fuel prices higher. Energy costs feed into kind of everything going on market related. And then job markets remain strong. Initial claims at 209,000, well below 250 threshold the Fed watches. So no reason to kind of cut the price right now in rates. And then second last slide. What does this mean for buyers and sellers? So for buyers, obviously rates at 6.75%, kind of painful for them, considering just a few months ago we were at 5.99%, but kind of still expecting a better position than buyers were a year ago when they were exceeding 7%. If rates drop, competition increases fast. Being pre-approved and ready to act gives you that real edge. and kind of ready to pounce on the market. Down payment programs and government-backed loans are widely available. More buyers are qualified now than many people would kind of realize. For sellers, peak buying demand for spring season has likely passed. Pricing your home right from day one matters more than it did, obviously in April. Inventory is tight. Price cuts are running at normal historic levels. Correctly priced homes are still selling. The South and Midwest continue to show strong pending sales activity. Buyers are out there just, meeting the market is key, kind of finding that, target whenever you're pricing a home. So obviously a lot of the times, pricing your home is a moving target. Sometimes if you're pushing for, top end record breaking pricing, you kind of have to readjust and kind of look at the market on a weekly basis. Anyway, mortgage rates, affordability, economy. Median down payment hit a 4-year low in Q1 in 2026. So from 28,000 to 29,000 to now 23,000, about 19% decline. Down payments are percent of purchase price, 12.8% today versus 14% peak last year, and then versus 10% pre-pandemic. Government-backed loans, FHA and VA, now are up more than 1/3 of all purchase mortgages. VAs are kind of the highest share in over a decade at 11.7% of loans. Buyers are stretching to participate, but credit quality remains strong. And then the last thing is, this is not 2007. These are qualified buyers using available programs, not as risky, and subprime borrowing as we did see, before that crash. Last thing I want to mention, obviously, snapshot of today's interest rates. 30-year right now at 6.61%. 15-year has also gone down at 6.12. So we are seeing better numbers than we did last week. FHA, Jumbo, ARM, and VA have all adjusted as well. But like always, if you have ever any questions about your specific market or your specific home, let me know. Happy to connect and go from there. Have a good rest of your week.